Europe's been a low growth environment for a long time. It's a sort of question of order of magnitude about how low the growth becomes at any point in time. I think the thing that's probably going to drive the market for 2014 is going to be capital flows, to be honest with you. I think there is I think 12 to 18 months ago, if you sort of asked people to force rank where they would want to allocate capital in the world, the US would have probably been top, Asia would have been a close second, and Europe would have been a long way down the list and a very distant third. I think that pattern's reversed now. I think a lot of US investors feel that the US market's overheated. I think they're very nervous about pursuing Asia because Asia has started to slow down and it's been a little more volatile from a currency standpoint. And I think a lot of them kind of look at Europe. They recognise that the ECB's actions have taken away some of the systemic risk in the area, and they look at the amount of distress on banks' balance sheets and they look at the opportunity that comes with that, and that has them very excited. And I think that their capital flows, when they accumulate them and they pass them into the hands of people like us, can have a meaningful impact on the way in which the market's valued. So, in the last 8 weeks, Blackstone have raised $6.5 billion for Europe. In the last 8.5 weeks, Lone Star have raised $6.5 billion for Europe. Lone Star were oversubscribed by an enormous amount, and investors in their second closing were dramatically scaled back. I think when you add all of the cumulative capital that's flowing in that group, it has the potential to have a meaningful impact on values, probably a little ahead of the fundamentals through the first half of 2014. But I think there'll be the dominant force will be the way in which capital puts itself to work. Fundamentals will have to probably follow that. And of course, that always has challenges. The money runs ahead of the fundamentals. But I think that's going to be the thing that pushes markets in 2014 isn't going to be the GDP number. It's going to be the way in which people who have money allocate it.
Okay, interesting. Marcus, what's your thought on that?
Yeah, I would agree with Simon on a lot of the things, but actually, the ECB took action about two weeks ago, but I think that's part of maybe the negative story also from my point of view, because what does the ECB think about the state of the European banking sector? Because they realized they couldn't do anything on the interest level for the last month, so they lowered interest rates again. And I think the optimistic side that you get a lot of debt capital, that investments might be possible for the opportunistic players in the market currently, from my point of view, is not materializing, because I think the banking sector is still in a worse situation that a lot of people want to believe, and that is a little bit of the story the ECB has told us by lowering interest rates again. So the low growth and low interest rate environment we see in Europe, more or less for the investor side, it means that asset management is one of the key things that's coming back to work for the investors. It's not like buying a 5-year or a 10-year loan. Yes, that can work, and even the yields can be, from the spread side, quite attractive, but what you are doing afterwards. So I think now the story in the coming years will be more, how can the investors work with the assets? As Walter pointed out, the fundamentals are coming back to the agenda. Everybody's looking at really what are we buying, how can we work on the property, and how will it be placed in the market when we hopefully see some fundamentals, some higher growth, and possibly some higher interest rates in 4 or 5 years from now on. So I think the story will be not so much about the prime assets, it will be shifting to secondary, but only secondary in a way that you have to work on the property, not secondary by location on that side.